Hi everyone, welcome back to another video. In this video, we're going to be looking at my favorite dividend ETFs. The reason I am picking these ETFs is because they are quite substantially outperforming SCHD, which is a famous dividend ETF through Charles Schwab. To begin this video, I want to actually discuss a few important things here. So we are looking at the total return for each individual ETF, starting with SPYI, which is through NEOS, and then Goldman Sachs, which is the GPI and GPIQ, and the competitor to that is of course the NEO QQQI and SCHD. I wanted to put it on there for reference here. This is since back here in March, I would say. This is when the time frame is most significant. We can go back to February 5th here, but you can see the actual difference. It started to happen in about March. We can really start to see where the dramatic shift of these funds were going. So if we look at the comparison here and we scroll down, we can understand where are the 1 month returns, 6 month, year to date, and 1 year. We can see that SCHD, unfortunately, on the 6 month has actually yielded a negative 10.17%. That is significantly bad compared to its competitors of QQQI, SPYI, and also Goldman Sachs here. We can see is a substantial loss in capital. So your return on capital, you are losing money, unfortunately. And year to date, this is the one that has suffered the most at negative 4.39%. Now, of course, the recording of this video, it is in May here, almost into June. So these numbers will change as you watch this video in the future. But remember something, this fund has been underperforming almost all year. So it's something I'm looking at very closely, and we can see the dive off right there. It started to happen pretty much when all of those tariffs took a hit. It's not looking so good for this fund. I'm not saying to not own it, but I would be concerned about putting my money in this fund long term. Remember, this is not financial advice. This is just my opinion. That is where I am standing with SCHD at the moment. As we scroll down here to the bottom, we can see what the average return was. We can see that red right there is the SCHD, just so we can refer to that in the future here. And we can also see that year to date, it has actually been underperforming. And we can see that it has been underperforming year to date at negative 4.39%, which is substantial compared to all of the other ETFs. Remember something too, that this ETF has been around for quite some time, and the fact that it's suffering this heavily in about a year's time frame, we can see right here the total return. Some of the highest right here was actually QQQI, which is through the NASDAQ, just so you know. If you're unaware of that, it's one of my favorite ETFs, but we can see that overall it has been suffering quite bad in 1 year, only 1.85%. It's something that I'm actually going to be selling out of in my Roth IRA because it's underperforming quite heavily. Now, if we want to look at the max on this, we can actually see where this is going. We can see where are the true winners here in this ETF battle between NEOS and Goldman Sachs. We can see, obviously, it is actually Goldman Sachs and some of this on that total return. It is substantial at their 25% versus QQQI at 15.02%, and then GPIX at 21.98%, and then SPYI. And the reason I kept it like this is because these are the direct competitors of the S&P 500 and NASDAQ 100 right here. So I wanted to keep it as a fair and balanced competition in this analysis here. So one more thing I want to look at here is we can look at the dividends. We can see where is the payouts versus SCHD. Now, SCHD, as you know, is quarterly versus these are monthly paying ETFs. They haven't been around that long, but they are substantially paying out higher amounts for dividend investors. We can see where their yields are currently sitting at 12%, 8%, 14.76%, and then 10.57%. And then SCHD is actually the lowest there at 4.02%. And based off of this information, we can also look at the payout ratio and when these dividends are expected. And remember, this is quarterly for SCHD. If we want to look at the financials of this, unfortunately, it does not give us AUM under this, but we can actually go to another site to view that, and we will check that out in just a moment here. Basically, the performance overall, I would say SCHD is significantly underperforming. It's just something I don't believe in anymore, and I am going to actually be selling out of it tomorrow at market open. Let's jump on to a another website called Seeking Alpha, and let's dive into this a little deeper. So now that we are in Seeking Alpha, we can look at my favorite fund here, QQQI through NEOS, which is the NASDAQ right here. And we can see that it hasn't been around that long, but it has been performing like a champ. So back in 2024 is when this fund was actually launched, and we can see it was paying a nice dividend of 59 cents per month. It is not too shabby, and it has continued to go up and fluctuate, and even during the downturn it was only at 53 cents at its lowest, and recently 64 cents, which I believe is actually one of the highest. Actually right there was the next highest back in August. So this has been performing quite well. We can actually see the amounts right here, and I like to add it. I think it's a solid ETF to add to your dividend growth. We can of course go look at the scoreboard here. It's an A+. We can see the dividend growth is tremendous on this. And of course, we can go look at the yields. Where are those yields? And we are sitting at 14.76%. We can look at the growth. Of course, it hasn't been around that long, and they don't have anything on the dividend safety because this is an ETF, of course, not a stock. And then we can see what the basically 12-month payout would be. Right now, it would be at $7.32 per share for this ETF, which is not too bad. Now remember, we were looking at Goldman Sachs, right? So we want to go and take a look at that right now. So let's go right here to their competitor and let's click on that. Really like this about Seeking Alpha. Come here to dividends, and we can see what that competition is. It's only paying out $4.96, and we can see that dividend yield there at 10.57%. Of course, it's also an A, so it is a substantial one to add to your portfolio as well, but everything has looked good. This actually has a little bit more of a track record in the sense of time, just a few more months than QQQI, but it is still performing quite well, and the last dividend was 39 cents. Not too bad right there. Let's move on to the next one here through Goldman Sachs, the S&P 500. Now again, let's come here to the dividends and let's look at the grade right here. We can see where that grade is at an A+, and of course A, and we can see the amount is actually quite less here because it is the S&P 500, not as volatile, and it is only at $4.09, and the current yield is still healthy at 8.64%. And then let's go to the competitor of this, which is SPYI, and of course we're going to do the same thing. Come here to dividends. We can see the amount is actually higher at $6.15 with a dividend yield of 12.70%. We can see the dividend growth unfortunately is not rated as high, which is interesting to see that at a C, and then of course the dividend yield is at an A+. So remember I was telling you about SCHD, right? Let's look that up right now just so we can see this together. So if we come over here to SCHD, we can see the dividend yield is actually quite low. Look at that, it's only $1.04. That is insane, and then only a dividend yield of 4%. Remember, the other ones were as high as $7, so quite substantial. For one share is paying you so much more. And of course we can come to the dividend history. This has been around a lot longer, so of course the argument is that this will continue to compound, but we can also see that the dividend ETFs that pay monthly are actually surpassing this at the moment. Of course we can always revisit this, but that is the history where this specific ETF has been going. Of course we can look at all of the other factors. The dividend growth, it continues to grow, and we can look at the dividend yield. It has actually increased slightly, but not a ton. And of course the grades on this are only a B, which is not as great to see. And my takeaway from this is that this is not a bad fund to have, or even to have in your Roth IRA or taxable brokerage account. It's just not the tool right for me at the moment, but I still think it is a solid option if you do want just dividend stocks, because this is what it does track. And we can see that overall the performance has not been great. It has continued to decline. It has not been performing that great. It's basically kind of traded sideways in ways for a few years. It's okay, but it's not my favorite. And we can see the AUM, which is assets under management right here, is at 67.27 billion, which is quite high. And fortunately we cannot click on this and actually go look at the AUM, but the AUM has actually been fluctuating. It's actually been losing money on this fund, so I am not the only one that has noticed this. Let me know if you have any more questions or want to talk about a specific ETF. Please drop it in the comments down below. As always, thank you for supporting the channel, and I'll see you in the next video.